The volume-weighted average price is a trading benchmark used by traders that gives the average price a stock has traded throughout the day based on both volume and price. It is important because it provides traders with insight into both the trend and the value of the security. The formula for the VWAP is pretty simple. You add up the dollars traded for every transaction, so the price multiplied by the number of shares traded, and then divide by the total shares traded. On a chart, the VWAP and the moving average may look similar. These two indicators are calculating different things, however. The VWAP is calculating the sum of price multiplied by volume divided by the total volume, while a simple moving average is calculated by summing up closing prices over a certain period and then dividing it by how many periods there are. Volume is not factored in. The volume-weighted average price appears as a single line on intraday charts, similar to how a moving average looks. Like moving averages, the VWAP lags price because it is an average based on past data. Despite this lag, you can compare the VWAP with the current price to determine the general direction of intraday prices. It works similar to a moving average. In general, intraday prices are falling when below the VWAP and are rising when above the VWAP. So a rising VWAP and the price above the VWAP line means the price is likely in a short-term uptrend. A declining VWAP with the price below the VWAP line means that the price is likely in a short-term downtrend. Also, don't rely on VWAP exclusively to determine the trend, since it is only showing a historical average and not what is happened currently or in the future. So, what does the volume-weighted average price tell you? Large institutional buyers use the VWAP indicator to move into or out of stocks with a market impact as small as possible. They use the VWAP to identify liquidity points. The idea is not to disrupt the market when entering large buy or sell orders. The VWAP helps the institutions to determine the liquid and illiquid price points for a specific stock over a very short period of time. Therefore, when possible, institutions will try to buy below the VWAP or sell above it. This way, their actions push the price back toward the average instead of away from it. The VWAP can also be used to measure trading efficiency. After buying or selling a stock, big market players can compare the price to the VWAP values. A buy order executed below the VWAP value would be considered a good fill because the security was bought at below average price. Conversely, a sell order executed above the VWAP would be considered a good fill because it was sold at an above average price. Retail traders, on the other hand, tend to use the VWAP more as a trend confirmation tool, similar to a moving average. When the price is above the VWAP, they look only to initiate long positions. When the price is below the VWAP, they only look to initiate short positions. This is why day traders love the VWAP indicator, because more than often the price finds support and resistance around the VWAP. Knowing that other day traders and algorithms are buying and selling around the VWAP line, a VWAP strategy can help you to find dynamic support and resistance levels in the market. Also, the likelihood of a VWAP line becoming a dynamic support and resistance zone becomes higher when the market is trending. So for uptrends, for example, look for higher highs and higher lows and pay attention at the price action around the VWAP line. Here are a few reasons why so many top day traders love the VWAP. VWAP is a simple indicator. The price is either above it or below it. When it comes to trading, simplicity often rules. Second, it is an easy measurement on whether the stock is cheap or expensive on that day. You can also use it to help pinpoint intelligent entry and exit points for your day trades, and it can help you to determine trend changes, often quicker than moving averages. Now, how to trade with a VWAP? You can use it for two types of trades, breakouts and pullbacks. The VWAP breakout setup is very simple, but not what you might be thinking. So a bullish breakout is when a stock price moves above a previous resistance level, often with higher trading volume. This can signal that traders are excited about this move and the stock may go on an extended price run. But we are not looking for a breakout to new highs. but a break above the VWAP itself with strength. When it comes to a VWAP breakout, we look for periods when a stock price drops below the VWAP. This can often signal that the buyers are exiting their long positions, which lowers the price compared to the VWAP. This can potentially be a good situation to look for a long trade, with the expectation that the stock will soon bounce back and continue its upward movement. Essentially, you wait for the stock to test the VWAP to the downside. Next, you will want to look for the stock to close above the VWAP. You will then look to buy above the high of the candle that closed above the VWAP. Here are some examples of VWAP breakout trades. Next is the VWAP pullback trade. A pullback is where a stock that's on an extended move upward or downward makes a small movement in the opposite direction. Pullbacks are a common price movement, especially in heavy trends. To trade a VWAP pullback setup, you have to find a stock that's in a clear uptrend, consistently making higher highs and higher lows. The stock price makes a pullback to the downside, returning to the VWAP level on the chart. This is a chance to buy the stock at the daily average price. After you enter long, you're looking for price to continue its uptrend, gradually pulling the VWAP up along with it. Here are some examples of VWAP pullback trades. Here's an important tip. If you use longer term charts, such as the 30-minute or the 60-minute, your VWAP data will greatly lag behind the shorter term chart, like the 1-minute or the 5-minute chart. On a longer term chart, the speed at which the VWAP generates a signal could mean that you completely miss the move. So, if you use VWAP, opt for the shorter term charts. Also, you have to be smart with where you place your stop loss. A common mistake is to place your stops few points below the VWAP line. You will be stopped out often if you place your stop loss close to the VWAP. There's a smarter way. For instance, if you take a VWAP pullback trade, you should look to place your stop loss on the other side of a key chart level. That level may be below a pivot point or a previous strong support level. This way, you can use the VWAP to try to keep trading in the right direction, but maintain a stop loss at a logical level. Alternatively, if there's no major level, you can also look to keep your stop losses on the other side of a recent swing point. So, if you're long a stock that's making higher highs and higher lows, you can place your stop loss just below the previous swing low. The VWAP itself is a simple and effective indicator, but that doesn't mean that you can just add it on the chart then expect killer results. The volume-weighted average price has its limitations. VWAP is considered a single-day indicator and is restarted at the open of each new trading day. Attempting to create an average VWAP over many days could mean that the average becomes distorted from the true VWAP reading. Also, don't forget that VWAP is based on historical values and does not have predictive qualities. The VWAP serves as a reference point for prices for one day only. For this reason, it is best suited for intraday analysis. Keep in mind that VWAP is a cumulative indicator, which means the number of data points progressively increases throughout the day. The number increases as the day extends. This is why the VWAP lags price, and this lag increases as the day extends. Once you apply the VWAP to your day trading setup, you will soon realize that it is like any other indicator. There are some stocks and markets where it will pinpoint entries just right, and in others it will appear worthless. That's why I encourage you to use the VWAP indicator in combination with price action, so you can simplify your decision-making process and make better trades. As always, if you learned something new, Make sure you subscribe, click the bell icon to enable notifications, and leave us a like to show your support. Until next time.